going over a trade I took on the 26th of November, which was a Tuesday, on euro dollar. So going into the week, I was bearish because we've had a series of bearish order flow going on, loads of bearish candles, and I was predicting price to not go all the way down to this low because we'd already just taken out this sell side liquidity. Although we closed below, we took that out, and also held a monthly time frame fair value gap start just below that sell side liquidity. To me, that's quite a major location, and we also tapped into this weekly time frame order block last week. So I wasn't expecting price to reach down to previous week's low. However, the order flow is bearish, and I'm looking for bearish trades going into Tuesday. So Monday opens up bullish, and I was waiting for price to come up and take out Tuesday's high to look for a short. However, we also had CB consumer confidence news coming out at 3 p.m. so I wanted to wait until then before looking for any kind of trades. Right, Monday we came into this high. We also tapped into this order block right there, and although I waited for the news to come out, I don't think I had to wait for the news to come out because of the way price action played out the next day. So Tuesday, I'm waiting. Right, Monday price pulled back into this gap where it opened up and found support and then start to push up. And then Tuesday we had, right, so if you look at this, price pulled up, we had a market structure shift, and now essentially price is coming back up to that high. And this is during a New York session, so around 7:30. So that's, what time is that in the UK? 12:30 time. We come up and we start to displace lower. We had this break, or we have this breaker. We come down, we leave a fair value gap with a breaker, and that is a very good sign that price could potentially hold that level. And honestly, I know the consumer confidence news was coming out, but taking a short right here at this fair value gaps, 50% stops above these highs, would have been a great trade in itself. And like I said, I'm not aiming for the lows because I don't expect price to come all the way down to that low. These lows would have been somewhere in this range. I would have traded. However, I was watching this. I remember watching this bullish inverse fair value gap, and I waited for the news to come out. So news came out, I believe, around here, 10:30. So I believe 3 o'clock, 10 o'clock news came out just right there. We put in a market structure shift, and I believe I entered after price started to move down, and I entered at the 50% pullback right above this high. Yep, as price pulled back into that high, I traded right around somewhere around there, and I believe I took a 1-to-1 trade. It was a 1-to-1 trade from what I remember. Maybe I took the trade somewhere around here and then had my stops. Let me have a look. Yep, it was somewhere around here. I took the trade, and it was a 1-to-1 trade. Like I said, I wasn't expecting price to continue lower, especially after seeing this inverse fair value gap that price had formed, and price came into that low and found support and eventually pushed up. It didn't actually continue lower anymore the next day. So essentially, yeah, even though the order flow was bearish going into the week because we'd rejected quite a major level, I wasn't exactly keen on going all the way down to previous week's low for targets, and I wasn't really keen on looking for too many trades in the opposite direction. And then Friday again we have this, right? If Wednesday is such a bullish engulfing candle, I wasn't really interested in trading. And then Friday we had a bullish candle that took out the highs of the Wednesday candle and provided some entries potentially if you're looking to trade that, but I wasn't. And yeah, that's the trade. Let's just review the high time frame bias one more time. Strong bearish order flow. However, we had just rejected quite a strong level at this weekly time frame sell side liquidity, and at the monthly time frame fair value gap. So to me, after seeing that, I was, although bearish, I was not interested in taking a short like a very long trade. I wanted to be in and out of that trade. So Monday, I waited for Monday to play out, and then Tuesday, I waited for Monday's highs to be taken out, which it did before the news. I ideally wanted price to come up and take out that high during the news, but we took out that highs before the news during New York session, and yeah, we start to displace lower with leaving a bearish fair value gap with a breaker, which is a really good setup. And then we came down into this inverse fair value gap, found support, and then continued higher. On the 15-minute and the 5-minute time frame, we had this trade during New York session. Let's see if we had SMT with EU. Sorry, I meant with GU, and it does look like we had SMT with GU right here. On EU, price failed to make a higher high, whereas GU at the same time, price had made a higher high around the same time, and then it started to drop lower. So yeah, that's another good reason to go short because of that SMT during New York Open, which is around the time where price usually finds some kind of a resistance, any or some kind of a manipulation. And the fact that we came into quite a strong level, Monday's high also took out this high, I believe, above that, and we had a market structure shift down here, another confirmation, and yeah, I think it could have traded up here somewhere, but even after missing that, there was opportunity right here with this breaker unicorn setup, and that would have been a really good entry. But regardless, I took a trade down here, which usually I wouldn't take, but after seeing price start to displace lower, I was predicting that price could potentially clear the rest of that fair value gap, and yeah, took just a 1-to-1 trade.